Hello everyone, and thank you for joining us here at xm.com. You are watching the weekly technical outlook video. I'm Cristina Bartanido, investment analyst. And at this video, I'll briefly explain my analysis on dollar yen, pound dollar, and dollar loonie. It's expected to be a quite week in terms of data releases, but we have an important central bank meeting in the UK this Thursday. On Friday, Canada will release its employment report, and a couple of Fed speakers will be commenting on monetary policy throughout the week. So all the attention will be, of course, on the US dollar as well. In Japan, the Bank of Japan is scheduled to release its summary of opinions from its previous policy meeting. And since currency discussions continue in Japan, the risk of intervention will remain in play in the coming sessions. So starting first with dollar yen, the pair found strong support around its 50-day moving average last week, and then it pivoted higher. That increased optimism that another bullish wave could take place, and we can rule out this case since the RSI is currently trying to rise above its 50 neutral mark, and the stochastics over here are set to turn up near their 20 oversold level. So there is a risk for continuation higher, but there are a couple of key barriers which the pair should first overcome. The 20-day moving average, which is the middle Bollinger Band over here, is currently limiting upside movements around 154.75. Then above that, the pair will have to re-enter this broken bullish channel above 156.23 before it set the stage for another battle within the important 157.83, 158.70 territory, where the price peaked in April. Then there are a couple of key resistance trend lines over here. The one coming from January, and the other one is the second one is the upper band of this bullish channel. So I would like to see a decisive close above those boundaries in order to target this longer term resistance line coming from June 2023, currently seen around 161.90. Now the downside, the 153 number could act as support once again before the focus turns back to the 50-day moving average and this key support trend line around 151.93. A break below that would worsen the short-term outlook, likely squeezing the price towards the 200-day moving average, currently at 148.60. Now turning to pound dollar. The Bank of England is not expected to make any changes in interest rates this week, but it will be quite interesting to see what is its opinion about future rate cuts since the economy has started to show some signs of recovery. It exited a mild technical recession at the end of 2023. So given that inflation is still above its comfortably above its 2% target, it will be quite interesting to see whether that growth signs can delay rate cuts. Now looking at pound dollar, it faced another rejection around this critical resistance trend line at 1.2630, and then it put below its 50 and 200-day moving average, exponential moving averages over here, seen around 1.2560. So that pullback has increased has brought some caution back into play. So for the outlook to worsen, the pair will have to drop below the 1.25 level and below this broad range area in order to face a fast decline down to 1.2420. Below that, the next support could come somewhere between 1.2345 and 1.20. Well, from a technical perspective, if you look at the RSI and the stochastics over here, the indicators have shown little improvement. The RSI has gradually risen into the positive territory, but it's pointing down at the moment. The stochastic oscillator, the stochastics keeps trending down, so the bias is not clearly in the bullish territory. Nevertheless, if the price manages to climb above 1.2630, the next stop could be near the 1.27 constraining zone, where this resistance trend line from May 2021 is placed. Above that, the 1.2785 key barrier might be the next target. And finally, looking at dollar loonie, well, the Friday's employment report is expected to show a stronger jobs growth, but a slightly higher unemployment rate. The jobless rate has been trending up for a couple of months now, so another higher high in this indicator might raise caution within the Bank of Canada, which meets next early in June. While expectations, June's rate cut is still in play. There is 63% probability for a rate cut. So if the data disappoint, that could increase the odds for a rate cut as soon as June. So in this case, the loonie could move lower, helping dollar loonie to recover, to recoup some lost ground. Nevertheless, if you look at the market at the moment, we can see that the pair has been trending below within this bearish channel. So the 1.3525 on 37. The 1.3725 on 3750 territory, where this the upper band of this bullish channel over here meets the upper band of this shorter term bearish channel. So a break above that territory will be needed for the pair to meet again the 1.38 round level, and then higher than that, the 1.3844 high from April might challenge additional bullish actions ahead of the 1.39 key resistance level. Well, if you look at the RSI and the stochastics, the RSI is still around its 15 neutral mark. The stochastic is set to mark a bullish cross. So the bias hasn't entered the bearish territory, but if the price fails to exit this bearish trend, I expect a pullback towards the 50-day moving average, currently seen at 1.3610, slightly lower than that. The lower band of this channel at 1.3590 will be also a key area to watch ahead of the 200 simple moving average at 1.3560, and then below that, a more important support area would be this the lower band of this bullish channel at 1.3530, a break of which would worsen the short-term outlook, likely confirming additional losses towards 1.3476. So that's all for this week's important FX pairs. Thank you for watching and see you next time. Bye bye for now.